Welcome to State Law Exposed. Victor paid his car insurance every single month for 11 years, never missed a payment, never filed a claim. Did everything the state of Florida legally required him to do. He had PIP, personal injury protection, the mandatory coverage under Florida law that every driver with a registered vehicle must carry. $10,000. That's what the law requires. That's what he had. His emergency room visit alone was $8,400. His shoulder surgery was $34,000. His physical therapy over 6 months was $12,000. Total medical bills, $54,400. Florida's mandatory insurance paid $10,000. He was looking at a $44,400 gap that nobody, not his insurance agent, not the dealership where he bought the car, not the state of Florida, had ever bothered to explain to him. He did everything right. And he was still in a hole. Victor was a delivery supervisor in Tampa, the kind of guy who showed up early, drove carefully, and kept his paperwork clean. He was on his regular route on a regular Thursday morning when another driver ran a stop sign and hit him broadside. 2 fractured ribs, significant shoulder injury requiring surgery. He had done nothing wrong. Wrong place, wrong time, wrong intersection. What came next was something Victor had never prepared for, not because he was careless, but because nobody tells Florida drivers what their mandatory insurance actually covers until they're sitting in a hospital gown staring at an itemized bill. His health insurance picked up some of the gap. His PIP paid the $10,000, but the math didn't close, not even close. And the driver who blew the stop sign, state minimum coverage, $10,000 in bodily injury liability. That was it. Victor was facing $72,400 in total documented losses, medical bills plus 3 months of missed work, against a combined insurance ceiling of $20,000. Here's the thing about Florida's no-fault system that most drivers find out the hard way. PIP is designed to be fast, not adequate. Under Florida Statute SS6 127.736, every registered vehicle must carry $10,000 in personal injury protection. That coverage pays 80% of your medical expenses and 60% of your lost wages, regardless of who caused the accident, up to that $10,000 ceiling. No fault determination needed. No waiting. Fast. The catch is buried in the fine print. If your treating provider doesn't determine that you have an emergency medical condition within 14 days of the accident, your maximum PIP benefit drops to $2,500. Not $10,000, $2,500. Victor's rib fractures and shoulder injury qualified as an EMC, so he got the full 10. But $10,000 in 2026 Florida barely covers one night in a hospital and the anesthesiologist bill. It was never built to handle a surgery. It was built to handle fender benders. Victor did what most people do after a serious accident. He sat at his kitchen table, surrounded by paper, and tried to make the numbers work. They did it. Emergency room, $8,400. Shoulder surgery, $34,000. Physical therapy over 6 months, $12,000. Total, $54,400 in medical expenses alone. Add 3 months off work as a delivery supervisor, lost wages of approximately $18,000, and just total documented losses hit $72,400. Get paid $10,000. Health insurance covered a portion. The at-fault driver's insurer called and offered $10,000, their entire policy limit, and implied that was the end of the road. His own insurer pointed to the PIP payout and said they were square. Victor felt like he had fallen through a trap door in the floor of a system he had been dutifully paying into for over a decade. He wasn't wrong, he just didn't know yet that there was a rope below him. Victor started researching online the way most people do, in fragments, late at night, reading articles that gave him enough information to be confused, but not enough to know what to do. He found explanations of no-fault insurance that made it sound like PIP was designed to protect him. He found references to something called HE 1181, a bill that advanced through Florida House committees in early 2025 and proposed repealing the PIP mandate entirely. He wondered if it had passed. Here's the verified answer. HE 1181 died in the Judiciary Committee on June 16, 2025. It never became law. As of today, Florida is still a no-fault PIP state under SS 627.736, exactly as it was when Victor got hit. But what Victor found next was more important than any bill. On the declarations page of his own insurance policy, a document he had never read carefully in 11 years of payments. There was a line item he'd almost canceled the previous year to save $18 a month. Underinsured motorist coverage, UIM, 3 letters that don't appear anywhere in Florida's mandatory insurance requirements because UIM is optional. You have to add it yourself. You have to know it exists. Victor had added it 3 years earlier, $100,000 limit, and had almost dropped it at his last renewal because the savings looked attractive and the coverage felt abstract. He didn't drop it. That $18 a month was still on his policy. His attorney, the 4th person he called, after 3 insurance representatives who all gave him variations of "this is the most we owe you," spotted the UIM clause immediately and explained what it meant. Victor's own insurer could be required to pay the gap between the at-fault driver's exhausted $10,000 policy and Victor's actual documented losses. The at-fault driver being underinsured wasn't just bad luck. Under Florida law, it was exactly what UIM coverage is designed for. Before Victor's attorney could file the UIM claim, there was a gating issue to resolve. Florida law under SS 627.737 sets the conditions under which an injured party can step outside the no-fault system and pursue damages beyond PIP. It's not automatic. The injured person must establish one of 4 conditions: significant and permanent loss of an important bodily function, permanent injury within a reasonable degree of medical probability, significant and permanent scarring or disfigurement, or death. This threshold exists because Florida's no-fault system was designed to keep minor claims out of the courts. The flip side is that if you have a serious injury, a real one, documented, you can cross that threshold and access the full system. Victor's shoulder surgery resulted in documented permanent partial impairment of the rotator cuff. His surgeon could testify to it. That was the key that unlocked the door. Filing a UIM claim against your own insurer sounds like it should be simple. You've been paying them. They know who you are. The coverage is right there in the policy. In practice, it's a negotiation. Victor's insurer initially contested whether he met the permanent injury threshold required under SS 627.737. They weren't denying the accident happened or that he was injured. They were arguing about the specific legal standard, whether his shoulder injury rose to the level of permanent injury within a reasonable degree of medical probability. This is the moment where having the right attorney matters enormously. Victor's attorney didn't argue about it. He scheduled the treating orthopedic surgeon's deposition. The surgeon testified directly. Permanent partial impairment of the rotator cuff joint, documented functional limitations, no further improvement expected. That testimony did what legal arguments alone often can't. It put a medical professional on the record, under oath, confirming the threshold was met. There's a specific moment in cases like this where the other side's math changes. For Victor's insurer, that moment was the surgeon's deposition. Up until that testimony, the UIM insurer had room to argue, to contest the threshold, to push back on the permanence of the injury to buy time. After the deposition, that room disappeared. A board-certified orthopedic surgeon had testified under oath that the injury was permanent. The functional limitations were documented. The threshold under SS 627.737 was established. Continuing to contest it would have meant going to court to argue against the surgeon's testimony, a position most insurers don't want to be in front of a Florida jury. The conversation shifted from "do we owe anything?" to "how much are we settling for?" That's a very different negotiation, and it runs on a very different timeline. While the threshold dispute was being resolved, Victor's attorney was building the complete damages calculation. This is the part of personal injury law that most people don't see, the forensic accounting that turns a bad accident into a documented financial argument. Medical expenses, $54,400, fully itemized and verified. Lost wages, $18,000, calculated from pay stubs and employer documentation across 3 months of inability to work. Future care costs, projected by the treating physician based on elevated risk of early onset arthritis and the statistical likelihood of a second intervention within 15 years, given the nature of the rotator cuff repair. The total documented losses came to $72,400 before general damages. Against that number, the at-fault driver's $10,000 policy was already exhausted. Victor's UIM policy had a $100,000 limit. The amount the UIM claim needed to cover, was calculable, specific, and supported by documentation the insurer couldn't credibly dispute. The UIM insurer made 3 escalating settlement offers across 6 months of litigation. The first offer, after Victor's attorney filed, was $40,000. Rejected, it didn't cover the medical bills. The second was $60,000. Closer, but it left the lost wages and future care costs uncovered. The third was $72,000, getting there. None of these offers were accepted because each one left documented losses on the table. The final settlement came in at $75,000 from the UIM claim, combined with the $10,000 the at-fault driver's insurer had already paid. Total recovery, $85,000. That's against a situation where Victor's first 3 calls had suggested the ceiling was $20,000. 10 from Kip, 10 from the at-fault driver. The difference between $20,000 and $85,000 is a piece of auctional coverage that cost $18 a month and that Victor almost dropped. HB 1181 is worth understanding because it tells you something important about where Florida's auto insurance system is and where a lot of people assumed it was going. The bill would have repealed Florida's PIP mandate entirely and replaced it with higher mandatory bodily injury liability coverage. Under HB 1181, the at-fault driver would have been required to carry significantly more liability coverage, and Victor could have sued directly for full damages without needing to establish the SS 627.737 permanent injury threshold. It advanced through 2 House committees with strong votes. Then it died in the Judiciary Committee on June 16, 2025. It never became law. The reason this matters is that a lot of Florida drivers, and apparently some law firms and insurance agencies, believed it had passed. It had not. Victor's accident happened under the system that exists, not the system that was proposed. Know the actual law, not the law people told you was coming. $85,000. That's the number Victor walked away with, split between the at-fault driver's exhausted policy and the UIM settlement. His medical bills, $54,400, were paid. 3 months of lost wages were recovered. Future care costs were accounted for. The commercial and personal financial pressure that had been building since January lifted. His mortgage was current. His kids were fine. He returned to his delivery supervisor job with a repaired shoulder and an upgraded insurance policy. He increased his UIM limit to $300,000 after the case closed, because now he understood exactly what that line item on the declarations page actually did. The insurer who had initially positioned his $10,000 PIP payout as the end of the conversation ended up paying $75,000 from the same policy. The coverage was there the whole time, so was the law. Victor just needed someone who knew both. Pull out your insurance declarations page tonight, not next week, tonight. Find a section labeled UIM, uninsured, underinsured motorist coverage. If it's not there, it means you are one serious accident away from the exact situation Victor was in before the UIM claim was filed, staring at $72,400 in losses against a $20,000 combined ceiling. Florida's mandatory $10,000 PIP is a 4. It is not protection against a serious accident. It was designed for minor collisions. For anything involving surgery, hospitalization, or months away from work, PIP runs out before the ambulance reaches the hospital. UIM coverage is the actual protection. It is optional. It is not expensive. And the fact that it's optional, that Florida doesn't require it, means thousands of drivers are on the road right now without it. One stop sign runner away from learning what Victor learned the hard way. Don't learn it that way. Check the page. Make the call.